How much does Alabama tax on $60,000 of income if you're a retiree? That's what we're going to talk about here today on the Heritage Wealth Planning YouTube channel using the smartasset.com state interactive tax tool, which is just awesome. And you're going to get a lot out of this. And Alabama is the first of the 50 states we're going to dive into. So definitely subscribe. If you're not in Alabama, your state will be coming up. So subscribe down below. Don't forget to hit the bell to be notified because we're going to do a lot of these things. It'll be great for you to understand, maybe even start planning on how to reduce your taxes. So let's dive right into this, my friends. So the first thing we're going to do is we're going to go to my website at heritagewealthplanning.com. And you know you're here. Let me get rid of this. When you see the Peaks Island sign out there on the wharf, and we used to jump off that right there down, I don't know how big that is, 30 feet or something like that, into the swells of the boats that back up. This would be the car ferries. The car ferry would go backwards, have all these swells in there, and like idiots, we'd jump right into it. For the love of God, I'm not surprised. I don't know how we all survived that and didn't get chopped up in the blades of the boats. All right. Well, anyway, so you want to go to Tax Tools, then Interactive Tax page. All right. So you go to Tax Tools, Interactive Tax page. You come across the Federal Tax Interactive tool, which is from Tax Foundation. And I have they gave me the plug-in to use on my website. So that's good to embed. And now we got the state tax tools, and Smart Asset did the same. So we're embedding their tool into my website. And this is just awesome. So now we're going to go to Alabama because we're just going to do these in alphabetical order. And the zip code we're going to use is 35801 for Huntsville. All right. So what happens here is you'll see the Alabama retirement tax friendliness, and we're going to go down here, put 35801, and then we're going to put 40,000 in for Social Security. We're going to have 20,000 in for IRA distribution, 401k distribution. Now, if you have a pension, you can go down here and put your pension here, but I just want to do a comparison. 40,000 Social Security, 20,000 IRA, and flip them over. 20,000 Social Security and 40,000 IRA. We're going to say we're married and we're 65 years old to get those two standard deductions of $13,300 each. All right. So now for Alabama, we pay $534 in taxes. And that's only to the state. We don't pay any federal taxes on $60,000 of income. You want to know why? Because we take our provisional income, which is half of our Social Security plus our retirement income. All right. So half our Social Security is $20,000 plus our retirement income, which is $20,000 taxable income. And so our provisional income in this case is $40,000. So we know of our provisional income, we take 40,000, subtract out 30 was a 32,000, and that'll give us what, $8,000. So we know only half of that $8,000 will be subject to taxation. So $4,000 of our total $40,000 of Social Security will be subject to taxation. $4,000 plus $20,000 gives us $24,000 of taxable income. Our standard deduction is $26,600, which means our federal tax bracket, our federal taxable income is a big fat goose egg. I know that's a lot to chomp on, my friends. I got tons of videos on provisional taxation, tons, and how to figure out your provisional taxes, but just that's how it works. So once you do it enough, you got it in the back of your head, and you'll never forget it. So anyway, nothing to the feds, but to the state, we do pay $534. All right, that's what our taxes are. $60,000 in Alabama, we pay $534. Not too shabby. Now, what I love about the Smart Asset tool, we got to click. So if you click on in here, it'll let you go down in here because I want to show you what else they show us. So here they got their tax rates, and we're married filing jointly. So we have taxable income of more than $6,000, which we do in this case is 5%. All right, so that's pretty high, frankly. No other way around that. So let's keep on going down in this thing here. We talk about sales tax. I'm not going to talk about that here today, but I do want to talk about this right here. This is their interactive map, highlights the county that goes by, or towns, I should say, in Alabama. And it's breathing, is thinking. If I can minimize, there we go. That's what I wanted to happen. And so while we're letting it, right here. So look, they're going to go by the county or the city, and they're going to say based on property taxes, sales tax, fuel tax, Social Security tax, or tax. I mean, it's just freaking awesome. And so they're saying at the end of the day, number 5, and this is Huntsville's up here, up north, and so number 5 is Madison. That's right next to Huntsville. So Madison's right next to Huntsville. So if we go down here, and well, they actually say it's more. So why is it not? Oh, that's Madison County. Okay, gotcha. So this is going to be the town in Madison County. And it is Moore's Mill in Madison County that has a property tax rate of 0.37. They got a sales tax rate of $612, a fuel tax of $400. They don't tax Social Security, and retirement tax friendliness of 55.8. I don't know why they get 6,000. Oh, here's what it is. This number right here is not what we put in up here. All right, so we're putting in right there. I gotta keep going up. Bear with me just a second, mi amigos. That means my friends in Spanish, in case you weren't aware. So right here. All right, so we're using 40,000 Social Security, 20,000 of IRA distributions. Down here, they're not using that. They just have a flat rate that they're looking at. I'll show you what I'm talking about here if I can maneuver around this. They are using 50,000 of total income. Our hypothetical retiree is getting 15,000 from Social Security, 10 from a pension, 15 from retirement savings, IRA, and $10,000 in wages. So on that $50,000, the way that's broken out, and you're in Moore's Mill, Alabama, you're paying $6,250 in a total income tax paid. You're paying 0.37 on your property tax, $612 in sales, $400. So that just gives you a comparison that you can say, hey, what am I paying compared to all these other guys? All right, so that's actually it's pretty helpful. I like it now, but it's not going to be specific to you what we just put up there. I think the fuel taxes, so, I mean, you look at this stuff, man. I mean, look, in order to determine sales tax burden, we estimated that 35% of take-home pay is spent on taxable goods. We multiply the average sales tax for a city by the household income, less income tax. The product is, it's crazy. We calculate the effective property tax by dividing median property tax paid by median home value for each city. Median property tax paid by median home value for each city. Woo, that's crazy. To calculate expected income tax we would pay in each location, we apply deductions and exemptions. This includes a standard deduction, personal exemption, and deduction for each specific type of retirement income. Then we estimate how much this person would pay in income tax at the federal, state, county, and local levels. That's just stellar. No other way around that. So at the end of the day, now, again, this isn't reflective specific to you on the money we've already put in there, the 40,000 Social Security, the 20,000 in IRAs. But look at that. 0.37 property tax rate, can't be that, man. And then if you come down here in Chickasaw and then Washington and then whatever that, some of the cities don't pop up. It's weird. But anyway, so you get it, and then you can go to income tax, you go to property. It's just so much stuff to do. So let's just keep going because I want to now change around from what we have here. We have 40,000 Social Security and 20,000 retirement income. I want to do the exact opposite. 40,000 retirement income and 20,000 Social Security. Everything else stays the same. Let's see what the taxes are now. It's 3 times as much. 3 times as much. I got to write this down because I'm doing this is going to be part of my book, actually, the state-by-state guide to taxes for retirees. And so look at that, a huge change in difference. The reason being because now you got $2,800 in federal taxation on top of $1,500 in state taxation. So before we had no taxes from the feds, now we have almost $3,000. So before we had $534 in taxes, now we got $4,440 in total taxes. And the reason for this is simple. Provisional income is all of your income plus 1/2 of your Social Security benefits. So in this case, it's 40,000 plus 10, that's 50,000. We take 50,000, subtract 44,000 of it, and that's $6,000. We times that by 0.85%, and whatever that is, we'll just say 5,000 for simplicity because I don't know off the top of my head. Then we got to add another $6,000. So we take anything above 44,000 minus 32,000 is 12,000. Divide that by 0.5%. That gives us how much of our Social Security is taxed. That's 6,000 plus 5,000 roughly. So that's essentially $11,000 of our 20,000 of Social Security subject to taxation. We add the 40,000 that we've made of IRA income. So we have $51,000 of taxable income. $51,000 of taxable income, subtract 26,600 from our standard deductions, and essentially we got $25,000 of taxable income, which is in the 12% tax bracket, and there you go. And so now remember, we had $534 before in total taxes, my friends. Now I got $4,440. So total, and before it is nothing from the feds. So there you go. If you want to be tax reduced, the way to do it is start your tax planning now. even in Alabama, if you can start reducing your IRA distributions and maximizing your Social Security, you're going to be in better shape. So stay tuned because we're going to do the rest of the states coming up next. Don't forget to subscribe. And again, the way you find all this is heritagewealthplanning.com. We'll see you next time. Thanks, guys.